Thanks for staying with us. You're watching Investors Guide on ET now. Dhirendra is still with us in our Delhi studio, and we're talking about the Franklin India Blue Chip Fund. Now, this is a large cap fund with a very strong track record of over 15 years. Now, before Dhirendra tells us if this is a fund we should be investing in a market like this, Avanne is here to give us a quick introduction. Avanne.
Our big fund in focus, the Franklin India Blue Chip Fund, aims to beat the Sensex over the long term without taking on too much risk. The fund has rewarded its investors with an annualized return of 25% since its launch. It doesn't follow the crowd or play the momentum game and is relentlessly focused on long-term value. During the 2008 downturn, its cash exposure averaged just 5%, while in 2007, the fund's sector bets backfired as it stayed away from metals, power and real estate. Just last year, the fund's return of 84% was higher than the category average and placed it among the third spot in the 46 funds in its category. But let the numbers do the talking. If you invested 1,000 rupees in this fund when it started, you would have 21,360 rupees today. Our experts are here to give some more insight into this fund so that you may reap the benefit.
Thanks, Avanne. Well, the Franklin India Blue Chip Fund has very strong returns. It has a good track record. What are your expectations from a fund like this, given where the market is right now?
I would say that it is one of the safest equity fund one can get into. And for a long period of time, this fund started in 1993. But by 1996, this fund had been through a full cycle, starting as a closed-end fund. And since then, Franklin Blue Chip was among the first few to define itself what it will do and what it will not do. And at that point, I think it was able to articulate that it will be a large cap fund and remain a large cap only. There have been occasions when it has not done well. For example, in 2007, it was out of favor. There was also a phase in early 2003 when it was not doing well. But I think it has overcome all those patches. The kind of comfort which I derive when a fund does exactly what it is expected to and never does anything else. What inspires confidence. And don't look at today's return, because today when we compare it, there are occasions when other category of funds and other equity funds do much better. But I think the best part of this fund is that it never surprises me with its portfolio. It never blows out in a declining period, or it's able to withstand the declines much better. I would say, if you are wanting a safe equity fund, this is the kind of fund which you should have.
All right. During a market like this is a scary market for retail investors who are watching at home. Nobody can really tell us when the pain is going to end and when the market is going to actually turn around. If I'm a retail investor, I want to get started, I want to use an SIP, is this the fund that I should look at?
Yes, if you are a retail investor investing for the first time, then I would say that don't even think of this fund. Think of a balanced fund. But somebody who understands can withstand little decline and is unlikely to bargain for anything which is 35% decline in 2 months' time. It is suited for those investors.
And what sort of a time horizon should I give my investment if I'm picking the Franklin India Blue Chip Fund at a time like this, going into an SIP? What sort of time horizon should I have in mind?
I would say that, the minimum time horizon should be 5 years typically. But, the kind of market we are in, and if one gets started with the SIP, it's always good to be investing when the markets are low and shaky, when there is, things don't look very rosy. Those are the times when you don't go wrong. And when times are good, when you get started and when you are tempted to make that lump sum investment, that's the time when you generally go wrong. It is disappointing. So I think, at this point, even with a shorter time frame, one might be rewarded with regular investment in this fund.
Have a longer time frame if you're investing in equity, and if you're getting into the market right now when it's low, remember to use an SIP. Dhirendra, finally, your rating of the Franklin India Blue Chip Fund, should we be investing in?
Yes, one should be investing in it, and I would give it a 5-star.
5 stars there for the Franklin India Blue Chip Fund on Investors Guide. Dhirendra, a couple of questions for you. Ramesh has written in. He tells us he's going to make 1 lakh rupees by selling ancestral property. And he wants to know which mutual fund he should invest that money in. Now, he won't need the money, he says, for 7 years. And he wants to make a one-time investment with low risk. First of all, a one-time investment, does that make sense in a market like this? And which fund should he be investing in?
I think, we keep insisting that resist your urge to make one-time investments when it comes to anything with equity. And I would insist once again, he can be a little more conservative. He should choose a balanced fund that should do well. If he's willing to take chances, then I would say something like Franklin Blue Chip can also be a reasonable bet. But I don't think for somebody who is getting started should insist on making a lump sum investment. That I think is the biggest odd when you get started with equity.
All right, Ramesh, that's the advice going at you from Dhirendra Kumar. Remember, he said don't use a lump sum right now. It might not be the best idea, especially if you don't want to take that kind of risk. Staggering your investment through an SIP will bring down the risk that you take in the market. You can, of course, write to us on the email ID at the bottom of your screen, or you can reach us on our Facebook page, where we also upload archives of this show. So if there's something you missed that you want to take a look at again, you can visit our Facebook page. Dhirendra, thank you so much for joining us on the show and answering all of our questions. We look forward to sitting down with you again next week. So let's give it a quick break. On the other side, we're going to talk about your tax-saving instruments, so don't go anywhere.